you're basically given uh, one of these payroll registers. Okay, so you have these 5 employees. You have their beginning earnings, how much you're getting paid in the current period, and so your job will be to fill out the rest of this. Some of this is given. Okay, we kind of gave you the income tax withholdings, insurance, how much they contribute to charity. You can now use your Excel skills and your new knowledge of payroll tax to fill out the rest of this stuff. For the first part, the employee, the salary and wage expense, look out for the OASDI, and I think the limit, shoot, I'll tell you what the limit is. The limit is 147,000. Okay. So you'll notice that there is one employee that's crossing the border from under 147 to over 147,000. So you have to do a special calculation for OASDI for that one employee. Okay, so I'm just gonna go column by column, um, and do this with Excel. I think if you got it right but didn't use the formulas, maybe you'll still learn something. Okay, so ending cumulative earnings, I just take the beginning balance plus the current period, and that will give me how much after I've made this payment to the employees, how much their cumulative earnings will be for the year. So I can just again, in a couple ways, apply this down. I can either drag this corner, or I can go to the cell that has the formula, hold shift, press down arrow to however far I want to go, and do control D. Okay. Um, Now the OASDI limit, I can see that except for this second person who crossed the limit or crossed over the border, everyone else, their entire paycheck is going to be subject to OASDI. So I would do basically this paycheck times 6.2%, 0.062, and I'll just apply it downwards. But again, we know this one is going to need a special calculation. So I'm going to just delete that. Okay, so how should I calculate uh, the OASDI amount for this second person? So up until this point, they've earned 145,000. I think 145,200. So we're at this point, and then they're gonna go to 152,400. 152,400. And along the way, they're gonna cross over $147,000 limit. Okay, so this is the total distance they're going, and the total distance is 7,200. So this is 7,200. So I want to know just from here to here, how much is that? It's just simply 147 minus 154, 145, 200. So if I do that math, again, this is equal to 147 minus 145, 200. And whatever that is, this amount is subject to OASDI. All this is not subject to OASDI. So I just want to figure out this amount here. And again, the math is 147,000 minus 145,200, which is, again, this was how much they had earned prior to this paycheck. Okay, so the OASDI amount here is, again, 147,000 minus this starting amount, that times 6.2%. Because again, they've been already paying OSDI from 0 through 145,200 on their full paycheck. It's just now they're crossing over that limit, so they're only going to pay OSDI on that incremental amount. But they've been paying over the life of the year. They've paid more because they've earned more, right? It's just now that since OSDI is subject to that limit, they're only paying part of their paycheck. If the person had already earned above 147,000 by the start of the pay period, like let's just make up a hypothetical person, it's already earned 155,000, maybe they're earning 15,000 this pay period, okay? They would pay zero OASDI because they already are above the limit. They already maxed out their payments in prior pay periods. So at the start of this period, they're already maxed out on OSDI, so they won't pay any of it. So again, it's only when you start off the pay period below and then you end the pay period over where you have to do this special calculation. If you're just below the limit, you're going to pay the full 6.2% on the whole paycheck. If you're above, even at the start of the pay period, you're not going to pay any of it. It's just this crossing of the border that you have to think about how you're going to do it. Okay, so Medicare is 1.45%, and I just do my formula down like that. We've already given you the information here, because again, income tax is dependent on a number of factors like your filing status, how many dependents you have. You would have filled out some W-4 form, and your income tax withholding would be kind of determined by that calculation, but the book is not making you do that calculation, so it's just kind of giving you those numbers. Um, and then this stuff is kind of arbitrary, so it's just also giving you these numbers. So then the total withholdings is the sum of all this stuff for each employee. OASDI, Medicare, income tax withholding, health insurance premium, optional, charitable giving. And I'll just use the same formula for all of these. Okay, so the net pay is just equal to the gross pay, which is this column E, minus the withholdings. That's going to be your take home pay. What about the salary and wage expense? What is that? It's kind of a redundant column. Exactly. Okay, this is just equal to the gross pay. This is how much you as the employer are paying your workers. Okay, though they're not having all of that in their paycheck, that is how much you're actually like your business is expensing that full amount. Some of it is going to go to the IRS, some of it is going to go to the Social Security Administration on behalf of your employees, but this is the total amount you're actually spending to pay your employee. Okay, so I think I've repeated this like 3, 4 times. Okay, maybe more. I want this to be clear. This is your actual expense as an employer. So I'm just going to do a sum here and then sums for all of these. Okay, so now I have all the numbers I'm going to need for my journal entry. Okay, so I'm going to pause it here. To make sure that your journal entries are correct for the salary and wage expense. So we've kind of done number one. I'll give you a minute to make sure your number two you're satisfied with, and then we'll continue on. We have all of the numbers we need here, okay, in these total columns. So what I'm going to do here is we're going to have first the what is the expense? It's called salary and wage expense. We're taking an expense for paying our workers. That's what the whole point of this is. And we know the total. We know it's 19,400. And the easy first thing to consider is how much am I actually going to pay my workers? Okay. They're actually going to get in their pockets this net pay 13896. Okay. So I know at least, actually, let's just do this with cell references. I know in their pockets they're going to have that much. Okay. And I'm going to call this salaries payable. Salary and wage payable. Okay, it could be cash, but maybe we're not doing our journal entry on the exact day of payday. Okay, so let's just assume that we're going to owe them this money. Okay, now the rest of it, we have a mismatch here. Where's the rest of this expense going? Well, it's going to a bunch of places that the employees owe money to. Okay, number one, the employee owes money to Social Security, uh, of total of 186, or sorry, 868. So this is OASDI payable, right? This is a liability for me. I have an expense of this much total. Of that, I have to pay my workers. I'm also going to have to remit some money on their behalf to the Social Security Administration. I'm going to have to pay some to Medicare on the employee's behalf. I'm going to have to pay the IRS on the employee's behalf. I'm going to have to pay Kaiser or Blue Shield or whoever. And I'm going to have to pay whatever charities my employee wanted to contribute to. Okay. So again, this is all money that is like due to my employee, right? Either directly, which is this, or indirectly because I'm paying all this stuff on behalf of my employees. Okay, so I hopefully you're all clear about that now. Okay, all this stuff is uh, uh, part of my expense. It's part of my expense to hire these people, but they owe money to other people that I'm gonna just send the money to directly instead of giving it to the employee and then them paying all these people. I'm just gonna do it for them. Let's just complete this. So this is Medicare payable. This is income tax payable. This is health insurance, and this is charity. Okay. And again, not let's not be confused here. This is not my business's income tax because there will also be a tax expense for my business to on its income. This is the income tax payable that the employee owes the IRS. Okay, so make sure you're very explicitly clear about that in your head. So the next part of this is working with the employer payroll tax. Okay, so we just did salary and wage expense. Now we're going to have a separate employee payroll tax expense. Okay, and this is going to include OASDI, Medicare, SUTA, and FUTA. Okay, we already did the calculation for two of them. OASDI and Medicare, we already did because the employee contributes this much and this much. We as the employer also match that. We contribute the same amount. Okay, so it's like a matching, it's like a 401k, you can think. Okay, so we've already calculated the amounts for that. The Suta and the Futa, there's only one employee here because again, it's only on the first $7,000 of earnings. And you can see that all the employees except for one have already earned over 7,000 by the start of this pay period. So whenever they had started their year of earnings, they had already paid Suta and Futa, or we as the employer had already paid it. We only owe it for one employee who looks like it's a new employee. So they haven't yet earned $7,000 from us during the year. Okay. So don't think that the other employees got away with it or I, as the employer, didn't have to pay for them. I just already did it at the start of the year. Okay. Because you can see their starting earnings is above 7,000. These employees have, this is probably late in the year, this whatever this paycheck is. So again, Futa and Suta are two of them. The other one is OASDI and Medicare. And the Medicare and the OASDI again are easy because they're just matching amounts to what the employee pays. And again, what is this? This is for employer payroll tax expense. So again, to pay your employees, this is again why a lot of employers like to have like contractors, okay? Because they only will have this expense for contractors, however much wages they're paying them, okay? They are like not wages, whatever the contract rate. This employer payroll tax is for who you have on your payroll. Okay. So this is an extra expense that an employer has to pay in addition to what they're compensating the worker. Okay. So again, this is now maybe you'll understand about the games that like businesses will play with contractors. Okay. Now, contractors oftentimes are okay with it because the employer will be like, well, since I'm saving on payroll tax, I'll pay you a higher wage, right? Because they know that they're saving from not having to pay the payroll tax. So you as a contractor could potentially earn more, uh, but you're also not contributing to your social security. There's some downsides with that too. Okay, and oftentimes an employer will also give benefits to a full-time employee that they don't to a contractor. So there's some trade-off, right? A lot of travel nurses, for example, they earn a ton, right? Because they're contractors. They don't get any healthcare benefits, they don't get anything, but they earn a very high wage, right? And then they'll just pay they've worked it out, so they just pay, health insurance out of their own pocket. But the hospital or whoever employs them pays them more because they don't have all the extra healthcare, payroll tax, all the extra stuff. So they end up paying them a higher wage. Okay, so Futan Suta, again, we determined that there's only one employee who is earning less than seven, or who has earned less than 7,000, and it's this person here. And so this $2,000 is subject to futa and suta. Um, and if they got paid 2,000 in the next period, that's also going to be subject to futa and suta. In the next pay period, if they made 2,000, because they're at 6,000 at that point, and the next pay period after that, where they earn 2,000, only half of it would be, right? Because they're going to go from 6,000 to 8,000. So they'll have crossed over that border. Okay. So the crossing over these limit borders, that pay period, there's always going to be some special calculation. How do we do this? So we do 2,000 times 0.006, not 0.06. 0.06 is 6%. This is 0.6%. And then 2,000 times 0.054. Okay. And then the total expense is just a sum of all this stuff. Okay. So to have my employees, I paid this much as their compensation, and then an additional 1,300 almost for payroll tax. Okay, so now when we pay all this stuff off, okay, now we have all these payables. And just to remind you, I think I mentioned this, salary, or sorry, OASDI payable. What is the total amount in there? How many journal entries were affected by it? We have this one here, and we have this one here. So remember, there's two of these, 868, 868. And so the total is going to be this plus this. Okay, so now when you're paying the cash out, right, that's what this next journal entry is. Make sure you have the correct amounts for all the payables. And really, there's only two of them that are a little tricky. Let's look at all the payables we have here. I have all of these. I'm just going to copy and paste these. And then in addition, what do I have? OSDI and Medicare are already here. Sorry, actually, the first journal entry is just the salary and wage payable. So actually, I'm just going to copy these here, get rid of these. So salary and wage payable, I'm going to have to debit to get rid of it. And the amount is 13,869.96. So what should I credit? What account? Cash. Exactly. This is going to be 5 checks, right? And the respective amounts are this, 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 this. But the total amount of cash that is going out is 13,896. Okay, so that's the first one. This is on payday, or whatever my payday is. Now, for paying off all these payables, they're all going to be debits. What have I not included? So I have OSDI, Medicare, income tax, health insurance, charity. In this one, I have OSDI and Medicare, so I've already included those two. And then I just have these additional two. And then the amounts, again, OSDI is going to be this, which is 2 times 868. Medicare is going to be this 281. I'm just going to do times 2. You can, because you can see again, it's like matched here for the employee payroll. Okay, so I have these two. Oops. Income tax, I'm just going to get from here. And then I'm just going to apply these two downwards, okay, because it's the same. You can see here health insurance, health insurance, charity, charity. Okay, so now I have all the amounts from that first salary and wage expense journal entry and then futa. Okay, so now I have all of these uh, payables that I'm debiting. They're all going to be paid off, and I'm going to pay everything off with cash. Now, remember, all of these are different checks, right? OSDI and Medicare is going to go, one check is going to be for the sum of these, which is 2,299. That's going to go to the Social Security Administration. Income tax payable, that's going to go to the IRS. That's going to be a separate check. Health insurance payable, this is going to be a check to Blue Shield, whoever. Charity payable, that's going to be to, United Way or whoever. Futa and Suta, this is going to go to the EDD. It's the state, that department that manages the unemployment insurance. Okay, so though this will be like 5 different checks, it's all going to be cash. It's going to be this amount total is how much is going to leave my bank account, split across these 5 different checks.